The cryptocurrency market is still showing significant strength. Is Bitcoin preparing for a break over 38,000 this week? The chart we're going to take a look at says it is. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic weekend. In today's video, we're going to be taking a look at the macro and short-term price action, discussing the current range of consolidation sub 38k and a particular indicator we are watching out for to suggest a break of 38,000 is prepared and ready. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. If you're interested in getting access to that VIP channel with over 600 members, including access to our general chat, our trading chart and education chat, our trade setup chat, our news chat, our help chat, and our daily video chat, you can go ahead and contact me via the pinned comment in the free channel for more information. There it is. Let's go ahead, guys, and jump into the video. So starting on that market data, looking at the 24-hour volume, we have seen quite a significant drop moving into the weekend. We are down 51.9%, sitting at a total volume of 48 billion. As per 24-hour liquidations, we are seeing a 56% drop, sitting at 38.3 million. And of course, guys, if we take a look at the price action, over the last 24 or so hours, we can see we have had numerous attempts of a breakout of that 38k level. We are currently traveling just shy of 37.8. If we do want to see a breakout of this level, we will have to get a daily candle close above 38k to actually validate that breakout. We'll come back and discuss that more in today's video. Moving over to the liquidation data of 38 million, we can see a 15 million long and 22 million short liquidation. Of course, quite evenly spread down the middle, as we do see a little bit more chop on the weekends. Moving over to the volatility index on the 60 and 30, not really all that much has changed. We are starting to see the volatility index on the 30 drop again, and we are starting to see on the 60 over here, again, a little bit more of a plateau. Overall, volatility on the 60 is still in an upward trajectory, which of course is a good thing, right? The volatility is moving with the price, which is what we do like to see. Moving over to the DXY. And you know what, I actually do want to refresh this page really quickly, guys, just to make sure this chart is accurate over here. We can see now it has updated. So we can see the DXY has actually come down and retested this base of support around 103 to around 103.2. Of course, this is going to be our low and key level of support, as it does mark that second to third retest of this parabolic curve we have had in the last few months, since August as being our uptrend or overall trend that we've been moving in. So we broke down to this trend. We have now retested that point of that low, that local low point, of course represented by this 103.2 range. We do expect the DXY to potentially find some support over here. We can see the market so be printing a green dot, which is suggesting again we are starting to see signs of bearish weakness, okay, bullish absorption. They're absorbing these sells. The price again is beginning to develop a reversal. We can see that as the candles are getting a little bit weaker, and a lot of volatility is kind of pushing sideways and dragging out now again, which is reflective on the Mark IV and the RSI of potential exhaustion. If we do, however, see the DXY break down from this green zone, we can expect a continuation lower. This scenario over here will be particularly bullish for the stock market and for cryptocurrency. However, we could potentially see a bounce because we are at support. If we do see a bounce, remember, we are still in a downtrend while we remain below this diagonal trend line. So we're in a downtrend while we remain below the diagonal trend line. Moving over, the S&P 500 and Dow Jones are looking very, very strong. We can see S&P 500 again has broken out of that respective downtrending trend line, sitting above this horizontal range, and of course is coming up for a retest of our high time frame downtrending diagonal resistance. A break above this level will likely send the S&P back to highs. And of course, this is going to be the likely scenario if we break this diagonal trend line. While we remain below the diagonal trend line, resistance is resistance until it is not. However, we are in a short-term uptrend, and therefore we do at least expect a retest of this trend line. What happens after that, we'll assess when we come up to it. And for the Dow Jones, exactly the same chart and thus exactly the same justification. We are waiting for a break over this downtrending diagonal resistance for a continuation higher. If we do not get that breakout, we do not expect a continuation higher. If we see a breakdown below this red box, we're entering a short-term downtrend again. Overall, guys, this is looking relatively strong. So far, so good. Let's go ahead and jump into Bitcoin. But before we do, a quick word from Bitget and BingX. We'll check that out and we'll jump in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay, so jumping back over to Bitcoin, guys. A lot is happening on the higher timeframes, a lot is happening on the short term, and Bitcoin is in a particularly important level. If we look at the price action on the 12-hour chart, we can see the last 24 to 48 hours, so the last 2 or 3 days, we have been really hugging that 38k resistance, you know, almost to a T. We're sitting just underneath that resistance. And as we can see, we've had numerous retests of 38k now. We are retest back on the 10th of November. Of course, that resulted in quite an aggressive rejection. We had our retest on the 16th of November, again, quite a significant rejection. We had a retest sitting on the 23rd, again, a relatively significant rejection. And then we've had a retest which actually broke through on the hourly charts a few days ago, which resulted in quite a weak rejection. So what are we seeing over here? We're seeing a classic, okay, a classic example of absorption, okay, meaning there is a significant amount of strength over here as we're printing higher lows, okay, against a respective horizontal resistance with momentum rising, okay, but more importantly, from a structural perspective, that scenario, okay, that particular scenario between buyers and sellers cultivates what we will call a ascending triangle. An ascending triangle is simply a rising diagonal uptrend, so the price is an uptrend, against a flat level of horizontal resistance. This is what we call an ascending triangle. Now, ascending triangles are inherently bullish as they only develop via what we mentioned before. Higher lows, okay, printing, meaning, again, the bears have been absorbed, the bulls are buying up these lows, okay, the bears are losing strength, okay, and this strong horizontal upper neckline of resistance, which is rejecting the price into a tighter compression. So if you look at structures, and we'll go ahead and talk about this really quickly, if you look at any market structure, whether it be a descending wedge, okay, whether it be a horizontal channel, whatever structure it is, you have to take yourself out of thinking about this as just a shape and understand the structure develops centered around the live actions and historical actions of real-time buyers and sellers. So if we start to see lower lows, we start to see higher highs, we start to see a compression, a downward compression, it is suggestive of particular events that are occurring within a set period of time. For example, a falling wedge, right? We see lower lows printing, okay? We see higher lows printing, but we see convergence. We see these ranges are shrinking. It indicates a reversal. It indicates, again, momentum is starting to turn up. It indicates bearish absorption. The bulls are starting to regain control. Although we are forming a wedge, the wedge isn't bullish because it is a wedge. The wedge is bullish because of the actions of which buyers and sellers are undergoing within this particular time frame, which is reflective as a wedge pattern on the chart. So you need to start changing the way you think about patterns. Your job as a trader isn't to identify patterns. Your job as a trader is to acknowledge what the pattern means in regards to what the buyers and sellers are doing over a particular time to better influence your future decisions or current decisions in regards to the probabilities of directional moves from these levels. Okay. I think that was a good explanation. I hope you guys understand that. So what are we seeing over here? Like we said, we're seeing an ascending triangle. Now, although patterns and structures indicate certain probabilities, nothing in trading is absolute. So even when you have an ascending triangle pattern, and it is historically a bullish pattern, meaning out of all of the examples we see of ascending triangles, historically they break up more than they break down. It doesn't mean we can't see a breakdown, particularly because we are at a major high time frame resistance. But we'll entertain the idea for now. If we do see a breakup, where is the expected target? Well, we take our range high, so our first retest, okay? We take that to our range low, so where that trend established before that high. We copy that range, go ahead and clone it. We apply it to that breakout at 38,000. You can see that actually takes us a measured move target over the bullish breakout target, which is 40,000. If we take a look at the high time frame chart, we can see 38 to 40,000 is a high time frame level of resistance. That is a resistance zone, okay? There's a particular zone on the chart of historical significance, which is indicative of, again, a larger quantity of sellers historically, or buyers, okay? It is, again, a larger quantity of volume, okay? The more volume in a range, the harder the price has to work to push through it. If we're below it, pushing up, it is resistance. If we're above it, pushing below, it is support. So we can see over here on the VRPV how this area here significantly drops off. You can look at the VRPV. Look how we have this range and then we start falling, right? The VRPV starts dropping post 40K. This is indicative of 40,000 to 38K being an area of historical resistance. So, going back to the small time frame chart, if we do get the break over 38K, we can expect an immediate target of 40,000. However, the measured move target is telling us, well, we could potentially see 41. We could potentially see 42. If we do break 40K, we know on the high time frame chart, the next target is going to be taking us to around 45 to 48,000. So a 38K breakout is a significant level, as it not only indicates, again, we've broken out of this short-term upward accumulation pattern, but we've actually broken out on a macro level of resistance, which could facilitate a continuation higher on the macro charts. Very important stuff there, guys. Very important. However, guys, resistance is resistance until it is not. And we'll come back and touch on that point in just a moment. But before we do, I want to go over to the 12-hour chart. As you know, guys, and as we've been saying for a very long time on this channel, whether you're a long-time subscriber, we've been subscribing for a few weeks or months, you would know the primary tools I use when I'm doing trading and analysis is momentum. I'm a momentum trader at the end of the day, particularly look for momentum shifts to indicate potential reversals out of consolidation phases. It's kind of what I focus on. So what we're looking at over here is going to be our RSI. Our RSI is a phenomenal tool, but we're not going to get into why too much today. We're just going to talk about what we're looking at it for, the purpose of us looking at it. If we take a look at the RSI, we can see the RSI has been significantly falling as the price action has been rising. Now, this generally would indicate, and does indicate, bearish, okay? It tells us we are seeing a bearish divergence, okay? A discrepancy between the movements of price and what the momentum is doing. That actually reflects to exhaustion. This represents overall exhaustion. So what we could say is we have exhaustion moving into a level of resistance. However, although that is perfectly acceptable and completely correct, and resistance is resistance until it is not, there are ways in which this exhaustion could be almost, I would say, deleted. What we are looking out for is going to be the RSI breaking above this diagonal trend line. If we see the RSI break above this diagonal trend line, that particular break would indicate the exhaustion we have seen within this range has now been lost. We have actually flipped it back to strength. So right now, on the higher time frame, we have moved up significantly. With that, we'll see a significant surge in volatility. As you know, momentum, the calculation for momentum, one of the components is volatility. So we see volatility rise, we see momentum rise. As we have been pushing sideways and slightly upwards into resistance after a significant rally, it is normal to see volatility generally fall. If we go back to that volatility index, we can see on the 30-day, we have been seeing volatility generally fall. This is an overall downtrend. We've had a little bit of spike, but an overall downtrend. So with that falling volatility, it is only natural that we see momentum fall, okay? Only natural. But that doesn't mean we are going to see a downtrend at the moment, because the downtrend has not been established. We are still in an uptrend. Important, guys, you have to trade with the trend until it ends. We are at resistance, so you should be thinking, okay, resistance is resistance until it's not. If we see rejections here, this rejection from a downtrend could develop a downtrend. If that downtrend developed, I should then flip my bias, take shorts. But at the moment, you should be saying, okay, resistance is resistance until we are not. We are in an uptrend. We have falling momentum. There's a reason we have falling momentum. If we see that momentum flip positive, if we see a break upwards, I should straight away know this is likely going to be upward accumulation and a continuation higher, and this resistance will break. So look at it from both spectrums. A lot of people are saying, well, Whale, are we going up or down? This is the dumbest question of all of humanity, guys. I'm not even kidding. This is not what we think about as traders. We do not sit here and say, okay, are we going up or down? That is not, never ever in my life do I sit there and do that. I look at the charts from a technical and structural perspective. I input the key levels, the key trigger levels, the liquidity levels, and I think to myself and I ask myself, what potential scenarios could I see playing out? And what would be the triggers? What would activate those scenarios? If those scenarios then play out, how can I position myself to capitalize a profit on that scenario? Okay, you are planning ahead of time for potential positions. That is what you're doing. So when we're looking at this chart, we're saying resistance is resistance. At the moment, I'm not too keen on taking massive longs, as we are again challenging the 38K resistance. If the 38K resistance breaks on the daily, I'd be expecting a continuation higher. Perfect, we're looking for more longs. On the short term and the 12-hour, we can see this RSI is showing us again, we do have overall weakness. If we flip this, we could be suggesting we will see a break upwards. If we flip that, I'd be more inclined to expect an immediate break over 38,000. Until then, we are again showing signs of weakness. We are at resistance, but we are on an uptrend. So let's talk now, because we've talked a lot about this, uptrend and breakout. When would be the best time to look for shorts? When would be the best time for looking for a breakdown? Well, we can see here on the horizontal range, we do have this compression zone. And we're expecting this compression zone to actually end relatively soon. We expect a breakout within the next couple of days. It'll be a breakdown or a break upwards. If we go ahead and take a look at the structure, we can see we have the range of which the price action is moving. We'll go ahead and delete that. Actually, no, we'll keep that one in. Let's go ahead and bring the V up. We can see the range of which the price action is moving between our dollar trend lines. Dollar trend line bullish trigger, dollar trend line bearish trigger. Okay, so we've defined the range of price action. The range of price action is the high at 38K. The range low is going to be the 33.35K level. Perfect. If we see a breakdown of the major uptrend, where would our target be? Range low. We're expecting a continuation down to range low. The range low is still going to be support, as this is a high time frame consolidation range, a high time frame trading range. If we break down the overall uptrend, that is when we'd expect the uptrend to end and a downtrend to initiate downwards. Watch out for that, guys. If we see that, we are looking for shorts. If we see any of these triggers break, whether it be the bearish trigger or the bullish trigger, that is when we expect continuations to the solid trend lines, which are the bullish breakout target or the lowest bearish breakout target. So we do see again a break below 33,350 will fill the VRPV gap between 33,350 and 30,600. If we break above 38k, we will likely complete the measured move of the ascending triangle, or at a minimum, retest the 40k high time frame resistance. So, what is Bitcoin going to do? We can't answer that question. We are not fortune tellers. If you're looking for a fortune teller, watch someone else. I'm here to tell you the facts. I'm here to tell you how to prepare and plan to capitalize on the moves with factual, structural, and technical data to support your claims and put yourself in the best position possible based on the probabilities and based on the historical price action. So we're watching for these levels. We're focused on these levels. We will capitalize on the next move that occurs. We just have to be patient. Thank you for watching. Hope you have a fantastic day. If you are interested in learning how to trade, more so if you're interested in learning how to do analysis, or it be technical or fundamental, or it be learning about indicators, learning about patterns, learning about moves, how to analyze the market, how to put together a proper analysis from start to bottom, how to put together a trade from start to bottom, the Crypto Academy courses is for you. It is a 10-unit course myself and Wolves of Crypto developed. We developed it a while ago now. You can go ahead and contact us via the email down below. There's a website link in the pinned comment. Check it out. Email, send us the information, and we'll send you all the details back to get access. And I also do want to note, guys, I'm trying to be more active on Twitter. Head over to Twitter. And the second YouTube channel, MegaWhale Alts, is still active. I haven't uploaded a video for quite some time because I've been busy, and it's just, altcoins sometimes you lose a bit of motivation to talk about altcoins, but we will get back into it. The channel is still there. The channel is still going. We'll be posting at some point again soon. And I'll catch you guys tomorrow. Cheers.